Black Hills Information Security has been helping companies find their weaknesses since 2008. Email consulting@blackhillsinfosec.com and see how they can help you sleep better at night. Welcome back, everyone, to Startup Security Weekly. I want to remind everyone to attend a conference being put on by Security Weekly in collaboration with Roger Williams University. It is Providence HackCon, ProvHackCon. That's securityweekly.com/ProvHackCon. You can go there. You can register. It's free. Attend if you're interested in helping influence our youth into getting into the cybersecurity field. It will be a series of talks from myself, Doug White, Ben Jackson, Ron and Cindy Gula, that will be focused on getting into the information security field. So if you feel passionately about getting our youth today involved in this awesome field, go to securityweekly.com/ProvHackCon and come attend the conference for free and hang out with us. It's going to be fun. SANS Hackfest is happening, Pentest Hackfest. You can go to sans.org/Hackfest17. Use the discount code Hackfest17. Get $300 off. Did I do the IT Pro ad? I don't think I read that one. We just interviewed Don. itpro.tv/startup security. Use the code SS30. Try it free for 7 days. 30% off your monthly membership for the lifetime of your active subscription. Make sure you go do that. We talked about IT Pro TV in our interview section, and I had one last one to tell people to go visit our stuff. I think it was in a previous version, but make sure you go to do two things for us. Go to securityweekly.com/insider, get on our mailing list for exclusive offers and access to our exclusive webcasts. So next year, I believe we're booked to do one a month next year. So if you want to get in on that and listen to our awesome content that happens during our webcast, it's typically myself, one other person from the Security Weekly crew, and one person from the sponsor of the webcast. The Security Weekly crew will typically present on the problem statement and talk about the topic in a free-form kind of presentation. We don't want it too formal. And then the sponsor gets 15 minutes at the end to talk about their solution. And it's not a straight-up sales pitch like a lot of other webcast programs. You get really good information, and you get some insights as to what the vendor is doing to solve a problem. Thank you, Michael Santarcangelo, right, for starting that mantra. And so there's 12 scheduled. I mean, there's one scheduled till the end of this year and 12 scheduled already for next year. So securityweekly.com/insider. Make sure you go do that. All righty, Michael, what are we talking about today?
Well, yeah, it's going to surprise you, but I pulled some articles on some leadership and some stuff around innovation, some ideas for startup success. I pay attention. I've really taken note of the fact that we're at that intersection between our community and our industry. And when we're looking at stuff through the lens of a startup, we're definitely looking at people that are innovating and helping us solve problems. And a lot of what I've learned over the last year of our journey is there's a lot of different ways to approach it. There's a lot of different components and elements to it in terms of the roles that VC play, or the role that private equity plays, the roles that the startups play, the role that startups within companies play. Like, there's all sorts of different angles and elements to it. And so, we're going to keep digging into it. And one of those things, and I was just looking up where Tomas is located, because I feel like, I'm going to his stuff on a very consistent basis for this program. So I'm gonna have to see if we can't get him on as a guest. But he talks about ownership, the defining trait of a leader, and he references a book called Extreme Ownership, which is written by Jocko Willink, and it's a great book. I think Jocko's. He references out his TED Talk, and if you haven't come across Jocko Willink, Jocko is.
That's not the one I sent you on Facebook, is it?
No, the one you sent me was Simon Sinek, which is also great, and Simon does a lot of great stuff.
Okay, so you recognized. I didn't recognize him. You recognized him being in that space.
Simon Sinek is the guy who wrote the book Start with Why.
Okay.
And made his breakthrough was doing a full size, I'll call it full size TED Talk, the 18-minute TED Talks on Start with Why. And if you haven't seen it, it's also great. And for those of you who tag along with Paul and I on Facebook, Paul tagged me in a video with Simon Sinek about leaders and defining leadership. And in fact, I'll tie the two together. So I'll veer off for a second, talk about that. Loved it. I thoroughly loved it. In fact, what was great about it was his examples were absolutely fantastic. Yes. It's a really short watch. It wasn't a read, but just this week, I gave a keynote on leadership at a conference, and talking about, and one of the things I said to people, and it's provocative by nature. When I started going down this path of leadership, I did it begrudgingly. I didn't feel like, in my late 30s, I should be talking about leadership. It was beaten to my head that I had earned it, and I was okay with it. And so one of these events says, "Well, what's your definition of leadership?" As if it was some sort of a challenge. And off the cuff, I said, my definition doesn't matter, and quite frankly, neither does yours. Well, of course, now a hush comes over the crowd. And I said, yeah, but here's the thing. It totally matters. Let's stop worrying about how we define it. Let's go talk about what it looks like. Let's go talk about what a leader does, and let's go talk about what an exceptional leader does. Mm-hmm. And where I've settled on it is, if you show me a person who invests in themselves so that they're better today because of what they did yesterday, and they invest in the people around them, right? I talk about elevating. To me, exceptional leaders elevate the people around them. If the people around you are better tomorrow because they spent time with you today, then you are a leader. And for me, it's not about being in a position of authority. It's not about what it says on your business card. It's about, do you do those types of things? One of the things that I like then was that's basically what Simon Sinek said today.
Yeah, he was downplaying the authority aspect of it big time, which I agree with completely.
And he's right too. The way I look at it, and it's a slightly longer conversation, but I talk about layers. I see people talk about levels of leadership, and for me, I always want to go, does your level go all the way to 11? Like, it's now, it sounds like I'm knocking some really great people in the field of leadership. I'm not. I don't see it that way, because a lot of people think, well, one day I aspire to be a leader. Okay, newsflash, you're a leader. Congratulations. Like, so what I look at is I call it the layers. And it's 3 layers. It starts with you yourself. You can lead yourself. In fact, I would argue you have to lead yourself. The next layer then is, if we want to try to get fancy, I sometimes call it a closely coupled cohort, which is kind of like sociological behavioral science type of thinking. It basically means team, or a unit that's kind of close together. And the reason I do it that way is because the next one is the loosely coupled cohort. So you could say organization, but you could substitute in myself and my organization and my industry. Right. So all you're doing is you're looking at the length of the connections and the frequency with which you interact with people. So here's the thing then. If you can lead yourself, does that necessarily mean you're qualified, for example, to go lead a SEAL team in the combat? Nope. Does it mean you're qualified to run a company? Nope. I'll be candid. You might not even be qualified to run a team. Can you run yourself? Yes. Can you be a leader for your family? Yeah. Can you be a leader for the people around you? Yeah. Does it need to say it on your business card? No. If you wanted to, send me your business card. I'll scratch out whatever you got. I'll write in leader. It's awesome. So when you look at stuff like that, what Simon Sinek said was, are you investing in your people? It's not a numbers game, right? And his examples were good. I won't give them away. His examples were on point, fantastic. Mm-hmm. But his bottom line was, if you're a leader, it's a privilege. It's about the people, and are you investing in them? Because if you invest in them, they're going to take care of you. So if you go then look at the stuff that Jocko Willink does, and the book Extreme Ownership is a fantastic book. He also has, Jocko built out a kid's book. The freaking name of it's totally escaping me, and I'm really sorry for that, but I bought it for my kids, and they all sat down and read it. Well, those that are of reading age sat down, read it again, came back to me and said, so did he write anything else? I said, well, he's got an adult version. Cool. Is that on our Kindle? Can I go read it? Yes. Sure. And so, the kids are reading it, and now we use phrases like get after it and good and everything else. I'm also, I don't really, the way I would say it, just by the way, is because people will look at me like, oh, you do a lot of Stoic philosophy stuff. It's interesting. I was reading yesterday, a different author was writing about Stoicism, and he said, most of us grew up with a poor understanding of Stoics and Stoicism. It was like, bite off your nose to spite your face and endure pain, because you don't have to, and do stupid stuff. That's not Stoicism at all, by the way. And I'm not sure that I certainly wouldn't call myself a practicing Stoic, but I've enjoyed reading some of the philosophy and some of the principles and stuff to it. And one of them is this concept of owning stuff, right? Seeing the world as it is. The idea of extreme ownership, and that Jocko puts here, and I think this is really important, especially in security today, is this concept of just owning something. Did somebody screw up? Cool, own it. Are you the leader? Then congratulations, you own it. And this isn't a new concept, by the way. I think what's a little different about it, first of all, it's a story. Let me say it carefully. It's a story told well. So what I mean by that is, it's not the best writing I've ever read in my life, but it's compelling anyway. Like you want to read it. And if you're in the security business, Navy SEALs telling real stories, I find that kind of fascinating. But what I take away from it too is the dynamics. It's the way that you take care of your people. You own it. So it's not just admitting a mistake. Yep, my bad. You own it. My bad. I could have done this. I see this now. This is what I'm going to do to correct it. Oh, that's different. And if you think about that, if you're around people that are like, did you do this? Yeah. Like you got to it's so tiring when you're around people that are like, I did, and that totally effed up. That's on me. All right, here's what we're gonna do. Because the whole it's on me. My bad. Walk away. All right, go play football. But if you're, yeah, I did, and here's what I've learned, and here's what we're gonna do about it, and that's the stuff. So anyway, there's some links here. It's really good. There's some stuff here that I think is really cool, and it's one of those things that I look for. There's some other stuff. Frankly, we're either going to talk about it this week or it's going to come up next week or next 2 weeks. I found a couple great articles recently, but it's this whole idea of, if you're pitching, one of these things that we'll see a lot of times in startups that we'll see in a security team, it's kind of like that stupid hackneyed question, right? Tell me about a time, Paul, that you made a big mistake in your life and how you handled it. Well, I
started the show with this guy, Michael Santangelo.
And now you have these recurring nightmares, and you're not even sure what to do about it.
God, now we're like 59 episodes into it.
Yeah. So, what you start to find is, as you look at these things, I love it when somebody just owns something. And if you think about it, I don't know about you, but like with my kids, I've told them, look, I favor hyper honesty. Like I like the truth. I like the unvarnished truth. I like bluntness. I've always been that way. Now, there's a way to be polite when you're being blunt, but I've always said to my kids, look, if you just tell me the way it is, we'll deal with it. You're going to hem and haw. You're going to tell me the way, right? The nice way of saying somebody's lying is, oh, you're going to tell me the way you wish it was. You're going to tell me the way you think you'd like it to be. You're going to tell me what I want to hear. Stop. I'm not interested. I find the same thing with leaders. I find the same things in startups. I find the same things in security teams today. Mm-hmm. If you've got a challenge and you're trying to work through it, awesome. Own it. If something didn't work out the way you wanted, also own that. It's so refreshing when people own stuff. And so, look, it's a great book. I recommend it. It's a fun feed to follow along. If you're into Twitter, Jocko, he's no BS. I mean, it's funny. I picked up something from him. At some point, he's like, well, what happens if I work for a leader that doesn't own, that doesn't take ownership? What should I do? He's like, take ownership. Mm-hmm. Well, what if it would take ownership? Like, it's like, and he's not a jerk, but he's like, it's funny though, because at the same time, I had people say stuff to me like, well, I really like this straight talk stuff, but what do I do if my organization's not ready for it? I'm like, straight talk. Mm-hmm. But what if straight talk? Like, yep. It's that's just kind of how you work it. All right, you and I have talked about the roller coaster. How do you feel about depression in our field and at the intersection of depression and security and technology? Do you have any thoughts on that?
Well, I think it speaks to some of Jack Daniels' work on fatigue in our industry, yeah. And I think that in our field of security, it can be kind of depressing because there's not a whole ton of wins all the time, and we're somewhat fighting a losing battle. So I think that does play into it. I think that also, the article talks about anxiety. I think that's could be just as prominent, if not more prominent, because of all the moving parts that we have to work with, whether you're running a business or doing security or both. It is very much a breeding ground for anxiety. So, dealing with some of those things. I like your whole take on honesty too. I use it with my kids. I think that can help a lot of these, mental health issues. You got to be honest with yourself and expect that you're going to be honest with other people and other people are going to be honest with you. Look, my kids get in more trouble because they lied to me than more so than what they did, right? Like whatever you did, yeah. I can't change that. That's already happened. We're going to have to deal with it whether we like it or not, and we will. But don't lie about it, then you're just in more trouble. So
right, no, you're making it worse. Well, and so it's interesting too because when you talk
purple.
about
there we go. Sorry,
you like that? I try to go purple every now and then.
That's good.
So Brad, this article, Brad Feld comes out. Brad Feld, he's a rock star in tech and in tech investing, and he talked about depression and obsession, and he talked about anxiety, and I think it's really important that we talk about it more. I think it's one of those things that we're embarrassed about it, but I've come to realize some stuff too. I've been a little circumspect about it, but I've I've come to accept that I've battled depression in some pretty interesting ways, and there's a high functioning depression where to the rest of the world you look fine.
Mm.
Maybe you're a little sad or whatever else, and I I'll tell you, because you talked about honesty with it. I'm happy to be honest about it. I didn't recognize it. I didn't know I was sliding into it. I mean, I look at it now, clear as day. Paul, I can look at the last decade and I can point to a lot of stuff. And one of the things that Brad says in this article that really struck me interesting is, just because you're working out, just because you exercise, just because you eat right, doesn't mean that you're not dealing with it. And I went, boom, wow, that's really kind of interesting to me. So I put this here more to say, I think it's important. And there's a couple more articles over the next couple of weeks that we're going to point to, because I think that if you're in a startup, you've got to protect your mental health. You and I, Paul, have talked about some of the boundaries that we're working to set, and some of the ways that we're trying to invest more time with our spouses and with our children, and engaging in activities that are always about the startup. And I find it's amazing the difference that makes. Yeah, like
but
night
also,
and day difference.
My take on this too is, and it's a very small point in the article, but they asked him what are some of the common traits amongst the best teams, and he said obsession about the product, total, complete, unyielding obsession. I think that's some of the things that certainly helps me with my, any kind of issues I'm having. I'm feeling down a day, or, I'm just stressed out about something, is that I get to focus on stuff that I love, that I have a passion for. And that really helps a lot. And even better, if you can do the work-life balance, then you feel good about spending time with your family, and you feel good about working, and you're not thinking about one or the other when you're, spending time with your family and stressing about work, because you know that, hey, I get to maybe go to work early tomorrow and, work before everyone gets up. And I'm excited to do that. I'm excited. I get to, pick what I'm going to work on. And sometimes that's something technical. Sometimes, it's more business focused, but it's exciting. And those kind of things, that really helps your mental health, in my opinion. I don't think it was highlighted there in the article, but I wanted to highlight it for our audience,
No, I think you raise a good point. So I wanted to shed some light on this. I know Jack's doing important work around this, and I know that these things are real. One of the things I've been looking at too is when we look at straight talk. Straight talk is a way to overcome friction, and I've really been spending a lot of time looking at friction in our organizations today, and it's staggering. So I'm going to be spending the next year or two like really digging deeper into it. But one of the real effects of friction is we start to burn out. And so if you think about the amount of friction that we face in security today, and the amount of burnout that we're facing, and the amount of depression that's out there, I mean, so let's do this. I get it. And I hope that if you're listening to this, that you know that you're not alone, and that if you're facing any of these things, please reach out. Reach out to one of us. Reach out to anybody, and let's not be ashamed to talk about some of these things, especially if you're doing innovation and startups and you're putting yourself out there. I totally get if or how that could happen. So we'll get there. All right. So last week, we brought up Tomas, and we talked about does emotional intelligence matter? And his conclusion was, yeah, not really. I mean, kind of maybe like 1%, but no, not really. But of course, I don't want to say it's the rage, because I actually think there is an importance to it. I think it's a context issue. So Fast Company ran an article the other day, 8 VCs explain how and why they assess founders' emotional intelligence. And one of the things that I thought really kind of mattered was they were looking at, so how do you inspire people? How do you encourage people? How do you handle these types of tough questions? How do you stay flexible? And to me, that's definitely that emotional intelligence. So if you remember, when we're talking about it, it's that ability to recognize your emotions. It's the ability to sometimes separate yourself from those emotions. It's the ability then too to use empathy, right? Strategic or tactical. So like I can understand what it's like. So what I thought was kind of interesting is, we've talked to VC in the past that said, look, the tech matters, but the team, I'm really curious in the team. And so all I wanted to do is do a counterpoint to say there's a number of VCs that have done the work, and they've looked at the pattern, and they've looked at their own returns, and they said, you know what? If I have a founder that's got high emotional intelligence, they tend to be better leaders. They tend to have better teams. They tend to scale better. I'm getting better returns from them. If I'm getting better returns from them, those are the people I want to go to. Now, remember, Tomas is an investor as well, and he said, look, I'm not seeing the return. So it's one of those areas. But I thought they had some cool stuff in here. Anything pop out to you, or any thoughts on this, from your perspective, Paul? Emotional intelligence, matter, doesn't matter?
Yeah, I think there's more interesting things to talk about.
All right, let's talk about stealth mode.
Love you, man.
It's okay.
Well, it's not a knock on. It's not a knock on you for any stretch by any stretch. But.
I didn't take it as a knock on me. It's one of those things where, when you look at leadership, when you look at what it's going to take to be effective, it's one of those areas that I think, frankly, is still emerging, and we don't know. We don't know enough about it. So all I was doing was pointing out some like it, some don't like it. Where you fall is different. Let's talk about stealth mode. When somebody tells you they're in stealth mode, what do you think?
That they haven't figured out the problem and their solution well enough to tell me about it yet.
That's exactly what I think. I never hear somebody say, well, we're in stealth mode. I go, that's exciting. That's awesome. I'm like, so basically you don't know what you're doing and you're terrified of everything. Well, no, we can't give it away. Really? So what the hell are you doing?
Let me expand upon that a little bit, because I think that stealth mode means different things to different people. And there are some companies, the ones that are frustrating, they're in stealth mode, which means they can't even tell me what they're doing. And I'm like, well, no. I look at stealth mode as we don't have an MVP yet. We know what we're doing and we're working towards a goal, but we really don't have an MVP yet. And when they ask me, well, okay, you're in stealth mode, what are you doing? And I'm like, oh, we're doing this. This is the problem we're solving. This is our point of view of the solution. And this is the goal we're working towards. This is our go-to-market strategy, but it's not available yet. And that's where we are with offensive countermeasures. If you want my kind of early journey update, right? We're working towards an MVP. We think we understand the problem, we understand our point of view on the solution, and we're very close to having an MVP. And here's how we're going to go to market. Amazon, Marketplace. We're going to let people buy it, and we're going to limit it when it comes out. And we're going to market it in these ways. Primarily, we're going to market it on the show. Gee, people could have guessed that might have been the way that we're going to start marketing it, right? Shocking. We're going to get the innovators and early adopters from our existing audience to go try it and use it and make suggestions and then make it better and then cross the chasm. When I talk to people and I'm like, so what are you doing? Oh, I'm working for a startup. Oh, that's cool. What do you guys do? Oh, we're in stealth mode. Hello? What does that mean? Right. I don't know. Right. I don't know.
Right. So this article pointed something out, and it's interesting listening to you talk about it. I like your distinctions on it. That nuance is important to me, and that's what I find and I find this frankly a lot in security. We're in stealth mode. Okay, what are you doing? Oh, we're in stealth mode. I mean, I'd love to tell you about it, but I can't.
Yeah.
Stop. Just stop. You can tell me the problem you solve, and you can even tell me the broad brushstrokes of the solution. This is a problem I see a lot of times in our industry. We sometimes lead out with the problem, although frankly most people forget to. We never talk about the consequences, which means I don't understand if you understand the problem or not. And then the solution is always, I'm the solution. Check me out. I'm right here. No, the solution is the solution. And then if I'm interested, I go, that's it. Yeah. How do you do that? Cool. Now you can tell me how you are the solution, or how you offer that solution, or how you solve that problem in a way that creates value. That's awesome. Then you've got me hooked. But so here's what this guy talks about, Dylan Field. He said there were three serious downsides to being in a stealth mode. And they kind of described a little bit more like you did, Paul. The money that they had, like they were told, look, shut your mouth, go focus on the product, get it done properly. You don't need distractions. Get out there. And then when you're ready, you'll make it work. And he said, look, there are three basic problems: media mishaps, recruiting, and employee morale. And what I think is interesting is the way that you've described it. I mean, first of all, media mishaps, you have a fantastic media platform. You have a lot of experience. I don't think that's gonna be a problem for you. The recruiting, again, you run a great ship, so not a challenge there. And the employee morale, I mean, you just beat people until they like it. I think I saw the
Pretty
poster
much.
once, so I think that's how it handles.
The beatings will continue until morale improves.
Exactly. But I'll tell you, the one here that stuck out to me is this misrepresentation. I see a lot of companies that aren't in stealth that, and we do this now sometimes. I'll look at what it says on Owler, or I'll look what it says in one of their filings, or I'll look at what it says on Crunchbase, and then I'll go look at their website and I go, wow, I don't understand either of them, and they're not congruent. Let me just point something out real quick. If you're in business to make a difference, by the way, this is going to matter if you're a leader in the enterprise. If you're trying to influence somebody, especially if you're trying to influence them without authority, you need them to understand what it is that you're doing. The more incongruent messages they get, the more confused they're going to get. And in case you think they're going to go invest the time to figure it out, let me burst your bubble now. They're not. And so when you say, well, when we were simpler, it only took 3 months to close a deal, but now it's taken like 12. Why is that? Because you've confused the hell out of the marketplace, and they don't know what to do about it. And that's kind of like where I look at it with stealth. Like I get it, right? And he points out in the beginning of this, he's like, there's two basic religions. You either go lean startup or you go cult of Apple. And the cult of Apple is quiet, 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 stealth, pop up. By the way, what have you seen in Apple in the last year or two? Lots more leaks. Yeah, they're not leaks. People know what's coming before it comes, and it's a smart way to do stuff. So anyway, all right, last piece for this week. I know a lot of you talk about the side hustle and the lifestyle business, and we've looked at stuff every now and then. So I'm going to put this out there. I thought it was interesting. I didn't disagree with this. Let me put it that way. I don't want it to sound like a full-throated endorsement of it. But what I liked about it was this. There's two things I liked about it. It's a 5-week plan. And you're just spending 20 to 30 minutes a day. So basically, over lunch, if you just gave something 20 to 30 minutes a day, this coincides pretty well with something I have called a 2-week test. Now, I don't mind for 2 weeks, but it's like, hey, if you did one thing every day for 2 weeks, would you have enough understanding to know if it was worth continuing or not? Turns out the answer is yes. And 2 weeks is chosen for a cognitive reason. So what I liked about this was its structure. It basically says, in weeks 1 and 2, go get your best idea, and it has here, like, have imaginary coffee with your ideal customer. I'd say, depending on where you live and work, go actually talk to somebody, right? Create your origins story, transform your idea into an offer. By the way, I think it's really important. I want to talk about this. I don't know, Paul, if you've ever done this, but it's interesting. If you think about what you're trying to get accomplished, and then you say, okay, I've got a small ad space. So we could do it in, I saw something really interesting. YouTube, what do they have now? It's a 6-second ad roll. Is that what it starts with? Like, there's like a 6-second ad. They're finding 6-second ads outpull 30-second ads, like, by some phenomenal margin, because the amount of creativity, the amount of constraint you have, really unleashes you to get down to what matters. We used to do that in improv. You got like 3 minutes to do the scene. Okay, break. Okay, now you got 1:30. Okay, break. Now you got 45 seconds. Okay, break. Now you got 15 seconds. What do you got? And it's funny as hell when you're playing, right? Improv, it's called a game. When you play it as a game. But you really start to realize that there's a lot of extraneous stuff you can whittle away. When you take your idea and you turn it into an offer, wow, you learn a lot. And then if you do it for real and people start asking questions, you're like, oh, I didn't think of that, or I don't know, or oh, so that's important. It's the same reason you and I talk to people and say, someone's going to give you money for that. That's, paying customers worth a lot more than somebody who's patting you on the back and tells you like it. So first 2 weeks, get your stuff figured out. Second 2 weeks, develop and actually launch your idea and break it down. And then, week 5, you regroup and you refine. I like it. Now, there's a distinction here. I don't know what your idea is. I don't know what you're creating, right? So if you're creating a product, you're creating an information product, you're creating a quick training course. I mean, if you go look at a lot of the online training course places, they're all focused on, I'm going to get you launched in 30 days or less. I'm going to show you how to build your email list. I'm going to show you how to build your platform. I think all that's valuable. But here's what I liked about this, if nothing else. You're trying to get something out of your head or to market. By the way, I think this totally works if you're trying to get a new project off the ground inside your organization. Just doing something 20 minutes a day with a little bit of structure over 5 weeks, you'd be amazed at the end of the 5 weeks how much you've learned and how much further down the path you are than if you had done nothing. Well, and so I have a big bias for action.
It takes that long, too, especially if we go back to focusing on if you were to distill down some of your value props in a sentence or two, whether that turns into a 6-second video or the opening line of an email or the opening line of some marketing materials. I always want to go back and improve our marketing materials, and then I start doing it, and I'm like, that's going to take, even just these like couple of opening sentences takes sometimes weeks of iterating over it to come up with distilling down your message and your value prop into that short message space.
And I'm working on it right now for my own stuff, and it's fascinating. And I'm at least getting more mature to say, okay, I'm trying to create a 1-page. Oh, but I'm not just trying to create a 1-page. And in fact, hopefully, everybody, I'll have some news for you next week. And P.S. And I by the way, this is not no. I appreciate this. Some of you have emailed me and said, okay, Michael, so you took the framework off your website, and I don't even see a place to sign up. Yes, I'm in the middle of doing some transition. I didn't want to give people bad information. Website is going to be updated, I'm hoping, in the next week, but I was also hoping to be done by today. So why don't we give me to the end of the month on that? And I've got this fantastic new resource for everybody and some bonuses thrown in there. But Paul, to your point, I'm looking at it going, all right, it's one page. How tough is this to knock out? P.S. It's already drafted. And I'm looking at it going, well, it's not really capturing everything. So I got to go do these other things first, circle back to, and I'm like,
Right.
all right, so this could take another week. Okay. By the way, what you're pointing out, and let me talk about this. So I did the keynote this week, and in that I talked about value. It went well, and we talked about value prop, and I talked about how, you know, if you're caught today in a leadership position and you're struggling, the most important question you can ask, and this is no surprise to anybody watching our program, is what problem are you trying to solve? And I had a lot of really good conversation with people saying that yeah, and by the way, they struggle with that. And I learned something else this week, and so I'm going to just put it out there bluntly. One of the things that I figured out when we look at this is that there's actually 3 stages. There's an identification stage, there's an articulation stage, there's a translation stage. A lot of people hear, oh, straight talk. Oh, you're translating value and understanding. Yes, that's exactly the problem I have. And I'll say, right, but we got to start by identifying the problem. They're like, yeah, no, I already identified it. Okay, and well, no one's listening to me. Okay, well, tell it to me then. And they go on and on and on, and I'm like, yeah, no, we didn't get that identified yet. So it was good because I got a lot of feedback on that validation, and I'm going to start answering some of those types of questions. I'll tell you one of the things that happened though was they had a sponsor go up after me and give like a 15-minute talk. I must have had 4 or 5 people from the audience come up to me afterwards and go, I guess he didn't pay attention to your talk. I was listening the whole time for him to describe the problem. Didn't describe the problem at all. Didn't talk about value. Didn't talk about impact. Like, didn't listen to you at all. But I'll tell you something else that was kind of interesting too, because this was an audience of leaders, security leaders. And faced with that, I heard a lot of questions that were like, well, tell me about, you know, so do you reside on the switch or where are you getting your feed from? And are you on-premise only or are you cloud-based? And they weren't fitting it into trying to understand the problem. They went right to the features, right? How many blinky lights do you have?
Well, features have to come next. And that's at least being in the field as a technical person for a really long time and still very much to this day, you know, now that I've learned 59 episodes into the show with you, Michael, certainly if one thing it's taught me is I ask what problem you're solving, what's your unique point of view on the solution, and those questions. Once I understand that, then I want to know, okay, now, like,
exactly right.
I don't need to know exactly how, but tell me those. And I think these questions are very valid, Michael, and we can use these in a lot of the content we're going to generate together from now until the end of time, right? Is that we want to know, is it in the cloud? Is it on premise? You know, is it an agent? Does it sniff the network? Is it in line? Like, those I think are important, high level. There's like a set of high level questions that I go through in my head of like the high level how. I don't need to know what cookie values you're setting and what level of encryption you're using. Like, maybe at some point I do, but like, I just want to know what a basic fundamental level. Okay, I understand the problem. I understand your point of view on the solution, and a lot of people can't even get to that stage. Once I understand that, okay, so like how, right?
And just so we're clear too, I don't mind those questions, and some of what you're talking about is what I would call the impact. So what I'm trying to understand is so it's what problem you're trying to solve, what value are you creating solving that problem, and then the impact question is my real qualifier, because friction is going to erode value. So let's say I've defined the problem properly. I understand my problem, and you've defined your point of view on the problem, and wow, they're kind of matching up. I want to hear more. Yeah. Cool. All right, tripped. All right, now what value are you creating for that? And, right, we've talked before, right? There's an emotional, there's a logical, there's a financial value. Okay, I tick all the boxes. I'm feeling really good about this. We forget to ask the impact question. And look, at a high level, asking about impact question, then what you want to go understand is, how do you impact my communication? Like language, taxonomy. Are you introducing a new jargon? Are you simplifying jargon? Or are you just kind of coexisting? Talk about process. I mean, you know, we've had what was Awake Secure. Gary from Awake was talking about 37 different screens as an analyst you've got to go touch. All right, so if your solution says, good news, I'm only adding 2 more panels. Oh, please, no. So I'm okay asking some of those questions if you understand the problem, check. You understand value, check. Now you're qualifying this impact. Because, by the way, if they come along and say, yeah, I'm going to cut that 37 down to 12. Oh, I'm interested. That's a multiplier for me. And then, of course, we always look at the technology. Right? One of the things I always look at is, do you integrate with the technology I have? And can you make the technology I have better? Yeah. Can you give me better insights? Can you tweak it better? Can you do something better? I'm cool with those questions. But what kind of surprised me was when the vendor didn't really list out any of that high level stuff, people dove right into, but what's your processor load and how do I manage the endpoints? And I was like, wow,
Yeah,
I don't even
yeah,
know if this is a
no,
good solution. So
yeah.
I just wanted to point that out to people to say, there's a way to do this. And, Paul, you and I have talked about some stuff maybe that we can do. And I think this might be an area where we can help people better think through how to use value proposition to work with vendors and ask some of these questions.
Hmm.
I did this when you and I were at Misty together, and I did the workshop there. I gave people, I said, look, just go ask the vendors those questions. They're gonna launch into their pitch, and that's cool. But when they're done, just say, so what problem do you solve? And stay on them till like you understand it. And I had a number of people come to me afterwards and say, made a huge difference because I get it now. And I figured out that they're really helping me solve a problem. It's not meant to beat on people. It's meant to just get to where we need to be.
Sometimes I like to phrase it as if, and this depends on how they've answered the previous questions, but oftentimes, especially in an environment where I want to get to the bottom line more quickly, I'd be like, so just tell me a success story. Like, tell me a success story of
I think
someone who's
it's
product,
great. Yeah,
right? I mean, that can get you some answers really fast, potentially.
Yeah, but here's the thing then too is, so if you're watching this and you're on that startup side, I don't want the success story to be just numbers. Give me some emotion to it.
Yeah.
Like, tell me what their struggle was. Take me into it, right? So back to your point, it requires some time to put it together. So let's
dive into startup
there's more on
news.
this.
You need to know. Let's do it.
So one of the things I wanted to do, I'm loving this series that Crunchbase put together. They're talking about different venture capital deals and how it works and some structure. And so the one I chose for this week, they're looking at pro rata, and that's going to matter to a certain extent because sometimes, and I don't go deep into this, and I might start paying more attention to it when we go through the companies, but sometimes you'll see whoever's in the seed rounds also in the A round. In fact, sometimes you might see whoever's in the seed round, they're still in the rest of the rounds, or they're in the A round and they're in the B round. They led the A round, they're not leading the B round. Like, what does all that mean? And so what starts to happen is there's this concept of pro rata. Now, the other thing that you and I have talked about with people, and I'm going to tie it all together here real quick, is does it matter who your investors are? And unilaterally, the answer is yes. I mean, it's not quite the match game or the dating game, but you're trying to find that good fit, not just with who the investors are going to invest in, but who you're going to take the money from. And the pro rata is going to matter there too. So pro rata is talking about the proportions. And the way that this tends to get written into the contracts is that once somebody makes an investment in you, there's usually a pro rata a clause or pro rata agreement that says that they're not obligated, but they get first right of refusal. They get the opportunity to maintain their percentage in the organization in subsequent rounds, or at least in the next round. So somebody came in at the seed round, or somebody came in the A round, and they own 1% of the shares, or 10 or 20 or whatever. Then when they go to the B round, they have the ability to participate in that up to, or sometimes exceeding, whatever their percentage is. So, I own 1%, and here's our valuation for the B round. And, if you want to maintain your 1% stake, this is what you have to do. Now, the reason people put this in is kind of twofold. It's good for the investors because if I'm investing you, especially as an early stage company, I want to know that I'm not going to get diluted out. Let's say I'm at 10% now, and as you go through more rounds, right? So you move from your seed round to your early stage rounds, your A/B rounds, and then usually about the time you exit your B round, you're going into growth, which means your unit economics are good, your product market fit is good, you go to market, your strategy, your scale, it's all there. Now you're going to start growing. Well, those become bigger rounds, and that's where your valuation really kicks up. Well, I don't want to end up owning like 1% of it. If I'm in at 10%, I want to keep in at 10%. So that's how investors can protect themselves. It also, a lot of times, if those investors want a board seat, or they want to be a board advisor, or they want to be some sort of board oversight, you have to have a certain percentage of ownership, and this is a way that they can protect themselves as everything moves forward with it. Also good then for the companies, because if you found that good fit, they're good advisors. They're not just money. They're not just writing you a check. They're advisors. They're helping you with everything. Then that pro rata says you know who to go to. Okay, we're getting ready for our next round. This is what we're seeing is valuation. We're not going to do any of these discounts or cap offs or anything else. This is where we're going to be, and this is the money we're looking to raise and to maintain your equity percentages. This is how much you'd have to kick into it. A lot of times you find that those early investors that believed in you, that like your growth, that think that you're ready for another round, they're happy to invest in that round. And a lot of times, although they may not lead the round, they will help you get other investors in the round. So Prada works really well. Of course, the downside to it is, if you don't make good choices on both sides, it doesn't particularly help out. What you're starting to see, though, Paul, you and I've talked about this. We've seen a lot of really interesting, what they call opportunity funds pop up, and they're looking at that seed stage. Well, sure, because they're writing the pro rata agreements into it, and they're not spending a lot of money. And if you bubble up, then they can invest in, and they can keep their proportions up, and that's really exciting for them. So that's how pro rata works. It's one of those things that if you're in this side of the world, you need to know, but also matters because if you then start looking at these companies and how they're raising and who's in what, and as we see more people specialize in security, I will start paying attention to the names that pop up, and we'll get some of these folks on the show and we'll ask them how this works as well. So that's pro rata. There's more in there, and there's a lot of details and a lot of numbers, and it really breaks down the percentages and stuff. And to be fair, they did a great job on it. The whole series is fantastic, but I want to make sure that we're increasing some of our literacy as we do this. So that's it. All right, big news on the week: Attivo Networks. Attivo. Yeah, Attivo. Yeah, I was just trying to be fancy there, and that didn't come out at all the way I expected it to. So I'll take extreme ownership of that.
It's interesting to see.
I don't speak well.
It's interesting to see later rounds of funding being put into Deception. Does that mean that they've got good sales? Their sales are increasing, right?
So there's a couple of things about this I think are kind of interesting, right? It's go look at that and then go look right below it. If you're looking at our show notes, Security Scorecard, $27.5 million Series C. Mm-hmm. So we got like $20 million in Series C rounds. Ooh, that's really kind of interesting. Like, okay, and that seems to be about where we're seeing stuff. What I thought was interesting about this, to your point, right? So Series C says to me, you're hitting your growth round, and so what I thought was interesting, though, was when you go look this up, so Attivo's got 44 million, 3 rounds, 2 years. That's some fast growth. Now, the conventional wisdom is your seed round needs to get you through a year to 2 years. Your A round's got to carry you through 2 years. And that's when you start getting your team figured out. You start getting your unit economics figured out. You start getting all the pieces. And unit economics is basically what's your cost of goods sold? What's your price point in the marketplace? What's your price to deliver it? Can you scale that properly? Are you going to actually make money doing it? Mm-hmm. And your product market fit is does your solution actually fit a problem that the marketplace has and will pay you to solve, right? So those are the two things you get together. By the time you get to Series C, it's kind of like, yeah, we got that. Now we need to grow. And that's a lot of times when we look at their Series C money, it's I've got to expand my hardware capacity. I've got to add these new feature sets in. So I need new developers, or I've got to really ramp up. A lot of times you'll see I need sales networks, or we need to increase our marketing and our visibility so people know that we're there. I think that's what we're going to start seeing with the Deception technology. The fact that it's raised this much money this fast, I do think means that their sales are going really well. Mm-hmm. And in fact, what I think is really interesting is they just closed out their Series B in May. Now, typically, the way it works is you're going to set a target for a round. I want to raise $10 million. I want to raise $15 million. And the reason you're doing that is because you should kind of know why you're spending the money. I mean, like what's the problem you're trying to solve? And so how much money, how much capitalization do you need? And how long do you expect that to run? So I kind of looked at this and I went, well, that's interesting. They just closed a Series B in May of 2017. Here I am, 6 months later, and you just closed a $21 million Series C? That's interesting. So it signals one of two things. They did not know how to raise enough money for their Series B, or they're on fire. And they're doing so well, and they've got all those pieces fit together that they're moving into growth mode. And almost kind of like those people we just talked about pro rata. Somebody looked at it and went, you guys are on fire, and we're gonna go ahead and give you some more cash because we're gonna push that accelerator down. We're gonna push you a little bit further and faster as you go through it, and we want to be part of it, and so do these other people. And it
sounds like Security Scorecard is really doing well then, based on your analysis, which I haven't heard of them before, but interesting.
I can tell you that Attivo is doing really well based on that analysis.
Okay.
So like I said, it's interesting timing, and so I've asked around quietly, and it's kind of come back to, yeah, they're doing great. Like this wasn't a run rate issue for them. Like they're good. This was we're pushing them faster because we really like what we see in them. So I thought that was really cool. And to be fair, Paul, it's made me want to go check them out better. So I'll tell you what, if you're watching us and you're on the enterprise side, I know you get a dose of the enterprise stuff, and you're looking at a lot of those things. What you can get from us are, if you haven't looked at Deception Technologies yet, it looks like Attivo is, if they're not the category king, they're gunning to be. And if you're interested in that, check it out. By the way, as I always love, if you are using them, call, like hit us up, tell us what it's like, tell us what you like, tell us how you're using it, and that really helps us. So security scorecards, same way, in a way to be able to do it. Now, what's interesting about this, because we just talked about science last week, and they got picked up, and they're the ones looking at ways to quantify risk, and we've had different people on it. We had CyberGRX on talking about the marketplace. We haven't had BitSight on yet, but we can probably get one of the co-founders of BitSight on, and they're looking at the same thing. They've I wouldn't say that they're a security scorecard, but what I would say is they're kind of like a security score. And so security scorecard is kind of doing that same thing. So basically, and I apologize because I did not attribute this properly. I forgot who I pulled this from, and man, I'm terribly embarrassed about it. But June 2016, when they got their $20 million funding round, their B round, they were valued at roughly $91 million. So looking at a $27 million Series C, I'd have to go figure out some of the math behind it, but obviously their valuation is up. And their idea is to say, hey, one of the big challenges is you don't know if your third parties are risky or not. You don't know what's up. You don't know what's going on. We do. We're taking a look at it. And I think that this is an area where we're seeing a lot of growth and a lot of potential for it. And there's a race to see how this is going to level itself out. Are you going to run it more like an exchange? Are you going to run it more like a service? Are you going to run it more? And so to be fair, I haven't really looked at a lot of security scorecards model. I had heard of them a couple times, and frankly, I hadn't seen much from them. But maybe we need to reach out to them. So if you're using security scorecard and you like it, tell us how it's helping you. If you're using it for third-party risk analysis, tell us how that's helping and how you fold it into it. Tell us how your third parties have felt about it, and let us know how it goes. Yeah, it's interesting. And yes, so based on this, 4 rounds, 2013, so they're moving fast as well, $62 million, and it's a $27 million Series C. I mean, that's no joke. Like they're moving. It looks like they're doing good stuff. Now they're cloud-based. Anytime you're a cloud-based platform and you're in a high-growth field, like I'm expecting, like if they raise a Series D, like it needs to be big numbers, because that's how they're going to push, chug, get those returns. Shift left. I put this in for you, Paul.
Just for me.
Well, for you and all of our dear listeners. But, it's interesting because we had Elizabeth on last week.
Awesome interview.
And she's talking about the need to shift left, right? And I'm finding like the DevOps and when we look at the containerization and the microservices and being more agile and doing DevOps, it's all about shifting stuff left.
You sound like a hipster now, Michael.
I know. Yeah. Well, that's I can assure everybody that you will never see me in skinny jeans. So we're good. We got nothing there to worry about. And with celiac, I can't drink beer, so no PBR for me. So we're good. Shift left, $9.3 million Series A. That's nuts. I mean, that's nuts like in a good way, but that's a huge raise. So again, either because it's cloud security, because it's containerization, or microservices, because of the way that they're looking at it, they needed a big raise, because that's how they're going to go after the marketplace. They've looked at their run rate, they've looked at their opportunity, and they needed to get almost, and frankly, if you're like at 9.3 million, what that says is somebody else wanted in. Like somebody wanted to be on the board, and they had to buy in to be on the board, right? So it's like, because it's an odd raise. Like typically people keep themselves around whole numbers. So 9.3 million, that just means somebody got in, or somebody else wanted in, or they oversubscribed. And it was probably not because of hubris, like, look at me, I got a bigger round. It was probably much more of and we want this person to be part of it, and they want to buy in. Okay,
you don't think it was because they had a good valuation, high valuation? Kind of hard
9.3? Yeah. I mean, I don't know enough about shift left, to be fair, and that's kind of why I put this in for you. So
Bain Capital is the investor, and they invest in a lot of security startups, as we've seen. Yeah,
no, they become a very popular name on it. No, the reason it's like not a $10 million Series A, or not a $9 million even, like 9.3. It feels to me like somebody wrote a check for $300,000 because they really liked it. They were excited about it. And sometimes, that might end up being a pretty interesting endorsement. I also put this in because we're paying more attention to this, and I think it's kind of interesting. And you've turned me onto it, and Matt's turned me onto it. Matt Alderman's turned me onto it. So I'm trying to catch up and learn what you guys know. CloudZero, $5 million Series A. Here's why I think CloudZero is kind of interesting. It's one of the I got to pull up the name. Sorry, one of the guys from Veracode is Eric Peterson, who was part of Veracode, is now the founder and CEO of CloudZero. Mm-hmm. So they got their Series A, and they're taking a look at the cloud. So they basically said, hey, we think there's a future here. So it's cloud, it's SaaS based, it's security based, and they're taking a look at user behavior and system fragility, which is an interesting concept. I got to be fair. I kind of like it because it's specific, but then I look at it and go, the hell does that mean? That said, $5 million Series A, that's not a small A round. I mean, like, maybe I'm still, it's funny. You and I've been doing this for a year and a half now, but a $2 to $3 million Series A is a healthy A. A $5 million A, a $9.3 million A. Woo, kids, we're doing some stuff. But you'll notice both of those. It's cloud, it's security, and it's in spaces that are filling up fast. You want to be competitive now. You're going to need some bigger money behind it.
I looked at this next one, Michael, and
yeah, what'd you think?
It makes me think that I should have taken my knowledge and experience with DNS and created a company. So Akamai bought Nominum, which is a provider of DNS and carrier-grade cybersecurity solutions for enterprises and managed services. And I think it really, one of the things it comes down to is DNS is hard. There aren't a lot of people with a true, deep understanding of how, not just how to do it.
Wasn't that one of our great interviews? Didn't you and I do an interview on that together on Security Weekly?
Dude, it's how to do it at great scale with some security flair thrown into it. That I'm seeing a lot of chatter lately in the security community about it, and I'm seeing a lot of companies that are focused on it, and or larger companies that are offering services in it. I think what started out, one of the things is Cisco buying OpenDNS, now calling it Cisco Umbrella, and now we're seeing a lot more in DNS, which is nice because it never goes away, which means everything I learned and all those hours that collectively probably makes up several months of my life that I spent with DNS didn't go to waste. So it's all good.
Still got some value. Yeah, and what's interesting about this too is they bought undisclosed. Typically, again, it doesn't always, but what I'm starting to realize is that's kind of a signal for down round. That's kind of a signal for, didn't quite hit valuation. What's kind of interesting though, which I think, when you look at this is they took about $41 million over 4 rounds, but their last round was 2005. They've been 12 years without taking
that round. I think that means they needed someone like Akamai to roll that into their services, that it wasn't something that necessarily stands on their own because of a limited market space. And Akamai just kills it. They kill it in that CDN market. So
nope, I think you nailed it exactly right, because again, the revenue estimates on Owler are interesting. They're crowdsourced, and I've talked to some companies that dude, they're totally wrong. Yeah. And then some are like, yep, they've kind of nailed it. So you take it with a grain of salt, but they said their revenue estimates were about $60 million a year run rate. Wow, I mean that's not shabby, Paul, but I think you just nailed it right. This is okay. So you've taken that money. What are your options for exit? You're not going public. I mean, you're not a unicorn. It's an interesting problem to solve, and clearly it looks like Nominum was doing it pretty well. If this almost feels like Akamai came to them and said, "Look, I'm kind of interested in that, and I'm not going to pay you all this extra crazy money. So I'll we're going to be quiet about what we pay you. You might find too after all this time, the founders are like, I just want to get the hell out of this. I got other stuff I want to do. There's all sorts of stories that come in it, but it's an interesting thing. And again, I'm going to point out, if you can solve an interesting problem in security, there's still exits, there's still money on the table, there's still opportunities. There's lots of opportunity there, and so, boom, that's where we go. So,
boom. Tell me about your journey.
It's been fun. I feel focused. I've been talking about that all summer, but getting out this week and talking to people and being able to share some of these updates in a keynote was really helpful. And then we did a panel and we talked about leadership, and I had a number of people come up to me afterwards and say, all right, this value prop thing's interesting. And it kind of validated some of what I've been saying. My CEO has been asking about that. All right, I see how that'll help me here. So here's some updates for me that people can start looking forward to. And I really hoped I'd have better announcements for today. I'm putting together, technically we call it a lead magnet, a reason for you to come to my website and sign up. I've I've got some, news we're going to talk about, and Paul and I have been talking about around writing and content and stuff. That'll be a future announcement. But what it means for me in a short run is I'm recommitting to some writing on my own website, which means it's easier to get the newsletter restarted, which means I've got some new stuff for people. And when you look at Straight Talk, one of the big things I've been really studying in the last year is what we call cognitive load or cognitive ease. And what I realized was you didn't have to answer all 5 questions or all 5 questions, all 3 perspectives, all 3 rounds. You can. There's times you need that. That's also really cumbersome. And what I realized was, gosh, if you just start with value and therefore value proposition, you're much better off. And if you could just answer those 3 questions, you're good to go. So what I'm creating right now, Paul, is a one-page design, print it out, hang it up in your office. And when you're talking to somebody, whether they're internal or external, ask them those questions. Oh, you're trying to put together, where you need to spend your time. Ask yourself those questions. You're ready to go make a pitch because you want to get this project done. Ask yourself those questions. I'm going to put that together along with some additional resources and some stuff around that. That ideally done in the next week or 2. The workshop's been coming together, and I got to tell you, I'm getting a lot of excitement talking to people around that, because what I've really looked at is how can I help you level up, start to get some straight talk, but start where we need to start, what problem we're trying to solve, and how do we identify those types of things in a way that lets you actually solve a problem that you have in your environment. So it's not training, it's a workshop. It's a workshop that trains you and you learn better, and then we incorporate this 2-week test. So I've done a lot of stuff around it. It's a little bit different, and I'm really encouraged by some of the conversations that I've had around that. And then I'm about to start the coaching program, and I've been looking at a lot. The way we're going to do it is there's going to be 4 slots a month. So the coaching program is a 90-day program. Frankly, I'm expecting most people are probably going to spend 6 months to a year with me, some longer if they want. That's great. For now, it's going to be 12 slots, 4 slots a month for the quarter, for each month of the quarter. That way, I got plenty of time to onboard people, work with them. It's kind of like an unlimited program to help with a variety of different stuff. So it's kind of neat because I've got a program that works for teams. I got a program that works for individuals. And I'm finding we'll talk about use cases later, but there's some really interesting stuff. I'll leave it at this. I had a company call me, and I'm really hoping this works out. They said, okay, so we've watched all the stuff that's happened with Equifax, and we don't want to be them. And our executive team wants us to improve the way that we're communicating to them, but we're not really sure what they want, and they're not really sure what they want from us. Can you come help us get all that sorted out? That might be my ideal, that type of a really cool situation. So I feel like things are coming together. I feel a little less restless, Paul. I feel a little bit more calm, and I'm real excited about the way things are going. And I'll say this. I've been focusing on Straight Talk now for 3 years. I've been focusing on really helping people implement Straight Talk now for 18 months. And I'm just starting to feel like, whoa, this is really cool. That's a lot of time invested on one thing. But whoa, is it so awesome. So I'm in a really good place, and I'm kind of digging it. And it sounds like things are going really well for you guys too.
Absolutely. They are. I kind of covered it earlier, so there's nothing more to that I have on that note. Things are going well here at Security Weekly as well. Always exciting times here at Security Weekly and Offensive Countermeasures. So, Michael, thank you very much, as always. It was fun. Thanks, everyone, for listening and watching. That'll conclude this episode of Startup Security Weekly. See everyone next time. Need it from the top.